This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
So do you remember when the pandemic first started? What was the first thing we all were doing? We were all going to the grocery store and we were buying toilet paper. In fact, I was joking around that the best market indicator was going to be the TP indicator. If the toilet paper stocks were reshelved, the market had bottomed, and that actually did happen. The best time to buy toilet paper was before you needed it, right? That was it. That was the best time to do that. And that is what I'm talking about today. I'm talking about very quickly about risk management. So today I'm going to be talking about the biggest things to protect. Number one, we're coming up into this election. A lot of people are feeling a little vulnerable. And so are we. We see lots of different risks, but you have to move forward. And one of the things that I have heard, and I don't remember exactly the source, but when you think about a circle, a little circle, you are in the center of that circle, and then each circle goes out. If you are protecting a family, if you have a family, it's really important that you protect yourself first. You take care of yourself first so that you are capable to take care of those loved ones, the others around you. But you have to protect that money. Having growth and then losing it all means absolutely nothing. We have to protect it. So when it comes to investing and money management, there's several different protection categories. The first one is to obviously protect your risk, your downside risk with your stocks, your bonds. So one of the things to do is to, every time you take an investment, you predefine the risk. How much am I willing to lose on that particular investment if I'm wrong? So every single thing that you buy, that you invest in, should have a predefined risk target. You know what? Playing a great defense is how you have the best benefit from your offense. And if you think about it, if you have an investment, it's going up, 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 and then it comes down, and then it starts going up again. If it actually comes down too hard, you have to really come up a lot just to break even. So if you have a 50% decline in your investment portfolio, you have to have 100% return just to break even to get back to where you were. So managing that downside is how you play a better offense. So predefining the risk would be the first thing. And we can get into a huge discussion about predefining risk. But when you're doing that, what are some of the things you'd look at? Well, what is the volatility of that instrument? What's a normal move for this particular investment? Like some of the stocks, we were recently looking at a company called Enphase. Very volatile stock. It moves up and down a ton, but it's got great opportunity potential. So we're going to want to buy less of it because it's a more risky investment, and be able to hold on to it because you want to have staying power. You want to be able to stay in those things. So you have to size your positions based on the risk. The more the risk there is, the less you invest. So predefining the risk. And then I would say the next thing is the long-term care insurance. That's one of the things that derail executives. It's a really big one. But it could be any kind of insurance that is needed. Insurance is a necessary evil. The biggest reason why insurance is important is because insurance companies allow you to spread risk across many, 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 many insured people. And that gives you a lower cost. But the point about this is that you want to buy that insurance before you need it. Otherwise, it's too expensive or you can't even get it. So don't let that derail your investment program. That is one of the things that we see, overlooking adequate protection. So you can have the best laid out plan, great strategy, but then you don't manage your risk. You're predefining your risk and your asset allocation, right? Or you don't have adequate insurance, whether it be life insurance, disability insurance, or long-term care is the big one that we see when you're retired. People don't plan for it before they retire, and then when they need it, they drain their assets down. And you can be a multimillionaire and drain your assets down. So if you want to pass money to your heirs, then that's something that you want to consider. If you don't want to pass money to your heirs, you have to consider, am I self-insured at this point? Now, some of our clients are self-insured, right? Because you have enough assets to where it's okay. But I would say the vast majority of people are not self-insured, even though they think they are. There's the numbers are, once you look at the inflation numbers of health costs, when you look at the fact that the average person pays like $365,000 in just co-pays and miscellaneous expenses during their retirement for health expenses. And that's not even including long-term care. Long-term care means you need help. You need some skilled care. And the other thing is that skilled care is needed by a lot of people. Now, me as an investment person, I don't really want to be sitting here talking about long-term care insurance. Why am I talking about it? Because it derails a good plan. So if you haven't looked at that, if you're getting ready to retire, and if you haven't really looked at that, like, what are my options? You may be self-insured, you don't need it. Or you may have some other plan that can meet the need. But if you don't, it's a good idea to fill that gap. Otherwise, you have a big surprise later in life, which is no fun. So protect yourself first. Playing a great defense lets you capitalize on your offense. Protect the money. And right now, as we're going into the election, we had our investment committee meeting this morning. And I was, my biggest point is we must be prepared for anything that we can possibly think of, right? There's always something that can happen that you don't think of. But we have to have a contingency plan for anything and be ready to pounce, because there are potential. Let's say people get crazy and they start indiscriminately selling good businesses. There's going to be opportunity there. And we have to be aware and keen to be able to pounce on it. So today is the day. Capitalize on your opportunities and protect yourself. Talk to you later.
The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals. If you like this information, be sure to subscribe and follow us on Twitter and Facebook.